Traders, pay attention. Right now, the market is betting that there's an 84% chance that the Fed is going to be cutting rates in their December 10th meeting. And that single move could trigger one of the biggest rallies we've seen in weeks or all quarter. So today I'm going to be breaking down why the market thinks this cut is almost guaranteed, the actual data, the inflation data, and the jobs data behind the sentiment here, as well as I'm going to be showing you a massive Bitcoin swing trade that is shaping up in the technical charts that is too big to miss. So welcome to Blomonomics. This is a channel for data-driven, real returns, live trades in a public portfolio. We're trading a 10K public portfolio for everyone to see, where we take a small percentage of our portfolio and we do short to medium term swing trades. We stack profits and then we inject those into long-term forever assets for ourselves to build true wealth. So if that sounds like something you want to be a part of, please like, subscribe, follow along, and I'll be showing you all my stock picks and kind of how I'm approaching the market here. So, number one, why do the markets think there's an 84% chance of a rate cut? It's not because the Fed just came out and said, hey, we're going to be cutting rates in a couple weeks here. That's not it at all. Long story short, how this tool works, this is called CMEgroup.com or the CME Fed Watch. It watches how big banks, investors, hedge funds are buying and how they're buying contracts that price in lower rates. When that happens, the probability goes up here. So long story short, what you're looking at is traders think that the Fed, or the market thinks that the Fed is going to be dropping rates in a couple weeks. A week ago, this was at 29%. So the sentiment has completely changed in the last week, which is why when we go to the S&P 500 here on the weekly chart, we had 4 down weeks in a row. And now we've seen one massive green candle here. The sentiment has completely changed. What drove that sentiment change? Number one is PPI, the Producer Price Index. So this is essentially inflation. Inflation is cooling or has been coming in softer than what expectations were. So that is, it basically gives the Fed room to lower rates because inflation is not spiraling out of control. Number two, the job market has been weakening. If you've been following along my other videos or you saw the non-farm payroll report announcement that came out last Thursday, the job market has been pretty weak all summer, including in the September numbers they just announced. And so as the job market weakens, it typically gives incentive to the Fed to lower interest rates to help stimulate the market. So inflation is not as high as expected. Job market is weakening, which is basically a really perfect scenario for the Fed to drop rates. What happens when the Fed drops rates? So if the Fed is raising rates, it's typically slowing down economic growth. Defensive stocks do really well. Consumer staples, healthcare. But as the Fed drops rates, risk-on stocks do really well, or a risk-on environment is sort of taking place. And that would be things like gold and silver could be going up, crypto, tech stocks, and so on. And so with a risk-on environment, we want to take advantage of that. And that's why I think the Bitcoin swing trade could be a perfect way to do that. So let's talk about the Bitcoin swing trade here. I'm going to Bitcoin. I'm going to the daily chart. Before we jump into the swing trade, I want to break down something that almost every serious investor and trader focuses on. And honestly, this is what separates emotional traders from professional traders. There are 2 main pillars that drive price action. Number one, what the chart is literally telling us, the technicals. This is the price action, the levels, the structure, the momentum, and the behavior of buyers and sellers. We look at things like support and resistance, trend direction, higher highs, lower lows, liquidity zones, and market structure. The second pillar is macro, the economic environment behind the chart. Inflation, interest rates, the Fed decision, liquidity in the system, and overall investor sentiment. So what environment are we trading in? The pendulum is swinging that we are going to be trading in a risk-on environment. This will be confirmed on December 10th if the Fed does drop rates. If that happens, we're likely going to see a big rally. So if the market and the macro sentiment is good, what am I seeing in the charts here that I believe Bitcoin could be a really big trade? Because if you look at it for the last, since really October here, since October 25th, So the last month, we've had a very, very red month in Bitcoin. Why do I think now is the time to buy? We're going to go over a very complex swing trade right here. I encourage you to follow along. You might have to watch this a couple times. I have covered this in a video a couple weeks ago. If you may have seen it, then this might be a little repetitive for you. There's a theory called Elliott wave. It's an idea that markets move in repeating patterns because investor psychology repeats. Price doesn't move randomly. It doesn't go up forever. It doesn't go down forever. It moves in waves driven by fear and greed. And so if you go to your tools here, to Elliott Impulse Wave 1, 2, 3, 4, 5, this is the free version of TradingView here, so you should all have access to this. Essentially, on wave 1, price starts moving up or down in this case, from a reversal. There's a pullback. There's another push down, another pullback, and the final push down before a correction. So there's 5 points, but there's 3 waves. Really, the 1 marks the top of the first wave, the 3 the top of the second wave, and the 5 is the top of the third wave. So there's been 3 waves in a downward or bearish direction here. The next tool we pull out is what I call, or not what I call, it is called the fib retracement tool. What I want you to do is I want you to click at the bottom of the last wave, the 5, and drag this up to the top of this little green candle, the top of this wave right here, and we can actually extend this. My fib retracement tool is going to look very different than yours. Copy my settings. Basically, all of these are quite translucent and a charcoal, and the golden ratio, which is 0.618, is in gold. What this tool tells us is the highest probability of pullbacks and basically exhaustion points in the market, mathematically. So essentially these golden zones act like magnets for price and support. Traders expect pullbacks. If you're an algorithm trader or an institution, you use these all the time, and they kind of align with natural psychology and behavior in the market. So big banks, lots of traders are using these tools. So if you know them and you can know how to use them, you can see what everyone else is kind of thinking about or looking at. So how I trade this, again, I'm not a financial advisor. This is not financial advice, and all results may vary. Trade at your own risk and trade with a small portion of your portfolio. But this is what I'm seeing in the chart. I'm seeing a perfect Elliott wave form right here. I take my fib retracement tool from the bottom of the last wave to the top of this 4th wave. And if Bitcoin comes down into this gold zone, so about $84,000, about $85,000, that is the point at which I buy. I'm buying because I think this is going to be the marker of a reversal, and this is happening at the same time that market sentiment is changing to risk on and bullish, which kind of makes it the perfect storm for a rally. Now, again, the market is going to move the way the market moves. The market could go in the opposite direction, and it could move very fast. So this is not a guaranteed trade, but I'll show you why I believe this is a good trade. You go to your next tool called the trend-based fib extension. I want you to take it to the same level that the 5 is at, the bottom of the last wave, to the top of this 4th wave, and back down to the 5. We're going to drag this out a little bit. This shows us the exhaustion points in the reversal. So I'm going to move this over here for now. We know that we're going to be buying at about 85K. I'm going to drag this in. Can I drag this in? Okay, right around here. So this is how I would treat this trade. If this wave drops back to the 85 zone, that is where I buy. I then am going to try to trade into this first exhaustion point, take some profits off the table, and then trade into the second exhaustion point, which I'd maybe leave about 25% of my trade running to see if it hits this 2.618. Why do I think this is a good trade, and how am I going to manage my risk? So you can go to a long position here. So say we buy at the 85 mark, 85,000 right here. We're going to be setting a stop loss right below the bottom of this 5th wave. So at just below 80,000. So at about 80,000 is where our stop loss is going to be. So what we can see here in the red, if we get stopped out and we lose this trade, we lose about 5.75%. If we hit the 1.618, we'd make about 11% on this trade. Where the real profit is the second exhaustion point, which would be about a 22% swing in a rally direction. So that is what makes this trade good for me. About 4-to-1 odds of growth versus loss. And this is how I'd manage my risk. Stop loss at 80, buy in at 85, probably take some profit off the table at about 94, 95, and leave some to ride back to about 100, 103. This is a very rare setup. This does not happen often. This did happen earlier this year. So this happened twice this year on the daily chart. Earlier this year, and we'll work through it together right now. You had this big rally. There are your waves. So we had three kind of distinct waves rallying up. And if we use our fib retracement, now we're going the opposite direction. We go to the bottom of this red candle. This shows us our buy zone. So you can see Bitcoin dipped down and it pulled back right into the buy zone. That's where a lot of people entered. Let's go to our trend-based fib extension here. So we go from the top of the last wave, the 5, down to the top of this red candle and back. And look where there was a massive exhaustion point. Right here at the 1.618. Okay, so that is the trade that we're doing in the opposite direction. 5 big waves, a bit of a pullback into the buy zone, and then a switch in direction into that exhaustion point, the 1.618, the golden ratio. Bitcoin comes down, we buy it at 85,000. That's where I'm going to purchase it. I'm going to ride this up into this exhaustion point, ride some of it all the way to the second. And if I do get stopped out, I lose 5%. So, you put $1,000 in this trade, you could lose 50 bucks, you could gain a couple hundred. You can amplify that to what is available for you to trade and, of course, manage your risk appropriately. There's a number of different ways you could trade this. You could just buy IBIT. You could buy Bitcoin itself. You could trade a 2 or 3x leveraged Bitcoin ETF, depending on your risk. So there's a number of ways that you could get into this. And so this is what I'm looking for this week, is I'm looking for my entry point into Bitcoin on when I'm going to ride this swing trade up. If you have any questions about this, DM me or feel free to comment on the video and I can kind of answer those in maybe a following video here. And I'm going to keep you posted on this trade. The markets are closed on Thursday for Thanksgiving, and I believe they close early on Friday at 1 p.m. Eastern. So the trading week's a little short here. What I think could happen is, because we've seen a bit of a rally here in the markets, you might see some profit taking either tomorrow before Thanksgiving or even on Friday. So you might see a bit of a pullback in the markets on one of those days. That could be the day that Bitcoin pulls back into that 85 level, and that could be the entry point in. But we're gonna stay posted. The other stocks I'm seeing here, and I've been talked about these exhaustively, are Duolingo, which I can cover in another video. I've covered it before if you go back and watch my videos. But I believe that this is sort of a big resistance zone here at about the 168, 170 mark, which we've hit a couple times now. And I said this back up here, back when it was trading at about 180. It's come down. It hit that resistance zone. I believe it's going to bounce off this resistance zone and could come as high as about 250 here in the coming weeks or months. So heavy on Duolingo. PayPal, very heavy on. Again, I've done a number of videos on it if you've been following along. Great earnings, got pulled down by the bad month in the market, but I think there's just a lot of runway here and amazing financials with PayPal to really rally hard, as well as Celsius, which has been rallying pretty hard at about a 6% rally today alone after this big pullback. So buying in here I think could be a really smart move as well. So we have Bitcoin, we have Celsius, Duolingo, we have PayPal. Go back to my videos, watch them on that. If you want me to post more, I'll keep these trades and following along. Maybe next video I'll open up the public portfolio and show you where all those trades are sitting. But pay attention to this Bitcoin trade. The technicals in my opinion, are showing me a trade that I love to take. The macro environment, the pendulum is shifting into an environment that is quite risk on. It could be a bull trap. Don't put a ton of money into this. Like really think and be smart about it. But this could be a really huge swing here. So I just want to let you know what I'm seeing. Subscribe, follow along, tune into my next videos. I'll show you my entry points. I'll show you everything publicly so that we can trade together. And then what I'm building out for everyone right now is a portfolio allocation series. So when I do make profit swing trading, how I take those profits and how I inject them into my long-term investments and what types of long-term investments I hold, because I think the market is shifting rapidly here, and to simply just be investing into like ETFs or following the market is actually very dangerous for you if you have a lot of time left in the market as maybe a millennial or Gen Z. But if you're entering close to retirement, there's a lot of different strategies we can use. But we'll chat about those in my next videos here. Thanks so much for tuning along. Follow along for the Bitcoin trade. This is shaping up to be something pretty crazy here, and I'll definitely be trading it. Thanks so much.